But thank you for coming to our panel discussion today. So I'll go ahead and go through a few introductions here. Again, I'm Eric Sorensen, Director of Crop Insurance at FBN. I'm from the Des Moines area, grew up on a small farm in southwest Iowa. Brock Elsen, sitting right next to me. He's from Miller, Nebraska, and I'll just go through a little bit of a brief bio for everybody here. He's a central Nebraska beef producer, and he and his wife, Carrie, and children, Cooper and Quinn, are active in production agriculture, owning and operating a commercial cow-calf herd near Miller, Nebraska. They're progressive in their operation and always researching new methods to keep input costs low. Brock's also active in his community, serving as the president of the Buffalo County Farm Bureau and as a member of the local EMTs and Miller Fire Department. Jason Moss. So Jason is a producer for corn, soybeans, and beef from western Iowa. Jason started farming with his father when he was a senior in high school, and he rented his first 120 acres when he was, I believe, about 15, 16 years old. Senior. And had a custom baling business starting at age 16. Today he manages his 2,200 acre farm with corn and soybeans, as well as a cow-calf operation and a trucking company. And Jason and his wife Karen are raising 3 boys, aged 12, 14, and 17, who are also active in sports, 4-H, and the farming operation. His wife Karen works in management at OSI in western Iowa, and Jason's been leveraging his precision planting and production data to assist in reporting for crop insurance for several years. And last but not least, Tim Couser from central Iowa. He is a corn, soybean, and beef producer, and also seed corn. He's very active in managing the family farm located in central Iowa. Farming differently is a standard practice for Tim. Growing up in the cattle business and having a true passion for agronomy has helped shape the outlook differently than most. After graduating from Iowa State University in 2009, he worked for a short time at Deere and Company before returning home to farm with his parents. The Couser family's been involved in some very interesting projects over the years, including hosting on-farm political events, partnering with Deere, ADM, and Monsanto for stover collection trials, and creating a field site for demonstrating modern environmental practices called the Modern Ag Farm. Tim's father operates a monoslope building feedlot, while Tim manages the row crop operation, including seed corn production for Bayer. Some of the more recent topics of interest have included biochar, pivot bio, single pass stover harvest, short corn, and strip intercropping. If you don't find Tim farming, you'll find him doing anything fitness. In fact, he was telling me he was downstairs earlier doing a little push-up contest, maybe flipping a few tires and whatnot. Tim was also featured in a Wall Street Journal article last month on short stature corn. So welcome, everybody. Welcome, panelists. So we'll just go through and keep it real casual here. If anybody has any questions for the panelists, we're going to have a time here at the end for that. So today, we just want to discuss a little bit, maybe some, how data can kind of formulate and help give us insights to making that decision for crop insurance. The thing that we'll talk about today, since we do have some beef producers here, and specifically Brock being primarily a beef producer, we'll ask questions pertaining to that type of insurance as well as row crop insurance. I do have to read a brief disclaimer here that's required for crop insurance, so we're an equal opportunity provider. The purpose of the following materials is to promote awareness of risk management concepts and to highlight risk management products, features, benefits, and availability. The presentation does not provide full details of policy provisions or approved procedures. Producers should consult with a local agent for specific details and program requirements. Farmer perspectives on data. This was a survey done last year by a subsidiary of Farm Journal, and I thought it was really interesting to kind of frame this discussion a little bit. There were several questions, and there were 610 farmers that answered the survey across the United States. How likely would you be to both collect and share more data about your operation if you received additional cost and/or premium benefits provided through crop insurance? I thought that was an interesting question. Another thing that kind of caught my attention was you could see 23% said not likely, and 77% said either somewhat likely or very likely. Data has really taken a role in many aspects of farming through the years, whether you like it or not. There's just a lot more data available. There's a lot more opportunities to help you collect data. One thing that everybody kind of struggles with or tries to strive for is, what do I do with the data? Data itself is just data, and there's an expense attached to that. What is the ROI on data, right, is what we're interested in, and specific to insurance. Here's another part of that same survey and some of the feedback that came from the report from the survey. 58% agreed with the statement, I believe collecting and sharing data on my farm's production and management practices will help my operation be more successful financially in the future. And then 87% agreed that data about my farm's production and management practices should be as tightly secured as my family's health records. Okay? And one thing I'll just state is, we take that seriously at FBN, whether it's insurance or beyond. Certainly privacy, security, and anonymity are definitely paramount. So what we'll talk about here a little bit today is, again, some of the benefits or challenges of using precision data to report acres and production, and then use of data when making insurance decisions. Some of the products that we're going to talk about here involve livestock risk protection, or LRP, pasture, rangeland, and forage, or PRF, which is a rainfall index product that basically covers and pays when you have a lack of the average rainfall in a certain area over a 2-month interval. And that's specific to perennial, like an alfalfa crop or a hay crop. And it even applies to grazing land or pasture land. And then annual forage is its close cousin, which uses the same rainfall index principle for an annually planted grazing or hay crop. And then last but not least, revenue protection, RP. It's the most widely used form of crop insurance across the United States. And of course, it takes a yield component and a price component per bushel, combines those together for revenue per acre guarantee. Just a quick snapshot here of some of the latest decision support tools that are offered by FBN Insurance. On the left, you have a comparative analysis tool that spoke of in a discussion yesterday. This one is showing some historical ARC County payouts in the blue, and in the orange, some SCO payouts, and then in the green, some ECO payouts, and then in the middle, speaking of PRF and annual forage, we use our rainfall optimizer tool. This helps our agents help you kind of dial in your coverage a little bit closer and make sure it's optimized to fit your needs in your area, and to also understand historical payouts and make decisions for the current year. And then on the right, we have a risk modeling tool. This one's specific to margin protection and just showing a variety of yield and price outcomes and how this product would pay or what your gross revenues might be. Okay, so let's go ahead and lead into some of these questions here. Just to kick things off a little bit, Brock, I've got a question for you starting out. And certainly Tim or Jason, feel free to chime in if you've got thoughts, because one thing in common is on their farm, they're all into beef production. So, Brock, when it comes to making decisions for like LRP coverage, PRF, or annual forage coverage, what comes to mind with making those decisions? What's important to you, like when you're looking at what your risk is versus what your crop insurance options are? And then are there any tools that you use? I mean, we talked about the optimizer here is obviously one of them.
Yeah, the rainfall optimizer is probably the most important one for me, because not only for the PRF insurance, but for the annual forage, which is new this year, I'm able to look back at the historical trends and figure out, okay, if it doesn't rain at this certain amount of time when I've got these crops planted, I'm going to end up having to buy feed or whatnot. So then I try to maximize my risk coverage by picking those months that are going to be most beneficial. So if it doesn't rain, I'm covered. But if it rains, great, I'm going to have feed. So I kind of offset the risk there is what was one of the things. And then with the LFP payment, I look back at historic trends, like when's the best time to maybe start marketing or starting putting a floor in. So that way, that's my risk management, because I've never been a person to do much with a broker or puts or calls or margins. So this was a nice way for a younger producer, when I started doing it, to get into helping get a subsidized payment. The payment was after I sold my calves, so I didn't have to come up with that payment right away. But then like I said, I was able to look and see historically when I could market the cattle to best benefit and put a floor on my livestock.
So thank you for that. LRP then is basically setting a price floor for your cattle. You have a cow-calf operation, so you're feeding these clear out then?
No, I sell them. Usually I start calving here. I'll start calving here in January, and then I'll usually get rid of them right around middle of November, 1st of December. I'll sell them to a feedlot, or I privately sell mine to a box beef subscription service that finishes them out and stuff. I use DNA and to market my cattle that are, I sell her cattle that will do good on the grid and stuff. So she pays a premium for that and stuff. But so I can, like, if I know when I'm going to sell or whatever, I can put a floor there, so that way I know, like, balance sheet and working with my financial, my bank and stuff, I can say this, I'm guaranteed this price regardless of what the market does. So that really helps me, like I said, put that floor in, so then I know I'm not getting paid anything less than this, no matter, for the year. Even if the price drops, I still guaranteed that price.
So really, in that respect, it's very similar to row crop, even though it doesn't cover production, right? It just covers price of your livestock. Production's usually not the worry. It's more about price.
Yeah, it just covers strictly price, not the production and stuff. I set the weight of my cattle, what they're going to be there, and then they give me a price, and that's what I set. And then, like I said, if I like that price, then I lock in. And like I said, what's different than a mark or a put is I can lock in one head up to, well, I think they raised it was 2,000, but I think it's even higher now. But so I can play the market and lock in 20 head here, wait 3 to 4 days, lock in another 20 head, and kind of go up from there. So that's really takes the emotion out of it too, I think, a lot, because I can set some goals of, like, if it reaches this much, I'm selling 20 head, or I'm locking in 20 head at that price. So that helps a lot.
So when it comes to making decisions on when to pull the trigger and what kind of coverage to buy for LRP, because there's different options, aren't there, for livestock risk protection?
As far as the options of weight of cattle, and there's the light end calves or the heavy end, or you can do feeders also. You can do it for feeder fed cattle and stuff. So those are your main things, just what target and what weight they're going to be when you sell them. And like I said, they gave you that 60-day window to move them before or after your contract expires. So that is really flexible that way. So
Gotcha. Well, thanks for that. Tim, I've got a question for you. When it comes to making decisions for your coverage each year, and again, a corn, soybean operation primarily, beef production as well, but also some hybrid seed corn, would you share just a few thoughts, when you approach making that crop insurance decision, which it's not cheap, especially today with the higher volatility prices. You've got higher commodity prices, which is great, because that helps establish your benchmark revenues for your guarantees on crop insurance. It does make it more expensive too. And there's kind of a lot of meat on the bone. There's quite a bit on the line, right, with the kind of values that we're looking per acre. What sort of things, even if it seems basic to you, that you kind of think about, what data points do you need from your agent, or do you think about yourself when it comes to making those decisions?
I think being a young guy in agriculture, you need to know your cost of production. And so you're trying to get your revenue protection as close to that as possible. And this year was unique in 2022 that we could actually insure above what our cost of production was. You also need to take a step back and kind of evaluate where you are in your stage of farming. Like, I'm a young guy, I'm a young buck. So if I have one catastrophic year, I'm probably not going to farm again, or it's going to be tough to find a lender that'll support me. So I'm obviously in the high coverage or high revenue protection bucket of crop insurance. So it's going to be expensive. Now the next thing on my priority list is whether I do enterprise units or optional units. And I think an agent, you got to have a great agent that can help you through that, because we did go through the derecho. Hurricanes do happen in Iowa. But that would basically be kind of the only event where you would get paid on a wide-scale basis a crop insurance claim for your whole farm. It's just not going to happen very often, even though you're saving a lot of money. So I'm not afraid to spend money on crop insurance. I would rather do it as an individual farm because I'm agronomy focused and I know each farm's capability. With a higher APH in a farm, I feel like it's easier to capture a crop insurance claim because you're starting from a high bar. If you have a new farm, you're taking the county average and you have a low yield to start with, and then you put an 85 or an 80% below that, the yield gets so low that it's going to be hard to capture on that. So those are some things I think about.
Appreciate that, Tim.
The private products is the part that I struggle with. Spending additional money up and above the multi-peril.
So tell us a little bit more. What are some of those private products that you're kind of considering?
So
yes or no?
Hail is one that we oftentimes take just because it's not very expensive. And I feel like, it's anybody's guess. You can put it on later into the season. You have time to think about it. But wind is one where I've debated whether to put on a $300 or $500 wind policy and then pull back my multi-peril insurance to keep my dollars per acre at a certain level. Otherwise, if it's just an add-on, you get to be so expensive that, gosh, that's, knocking on 8%, 10% of your cost of production. It's just too much.
Yeah, Iowa's become an expensive state to buy wind coverage, hasn't it?
So that's where we jumped right in. I've got one of my best friends is the technical agronomist for DeKalb Asgrow. And so when they started working on short corn 3 years ago, I went down to Huxley to Learning Center and was all about it for the main reason of wind tolerance. And I've had green snap multiple times on multiple farms, and I feel like I can do everything right, and there's no way to hedge against that. Once you get green snap corn, you've just lost it. So when you go through hybrid selection, like kind of right at the top of the list is green snap potential. I'm not naive to think that all corn, there's such a thing as corn that doesn't green snap. You get 100-mile-an-hour wind, something's got to pull, something's got to break. But instead of buying insurance, is there another way to hedge against that? And I think short-statured corn is a way to do that. Is it going to change the industry? No. It's going to be like electric vehicles. It's going to come up and be like 20 or 30% of a farmer's acres, and it's going to level off. We'll still plant tall corn in the future.
Very interesting. So what you're talking about, Tim, is, a lot of times we think about, when it comes to insurance, is it yes or no, and then what optionality, but you're talking about risk mitigation there as well.
Yeah, combination of crop insurance, agronomic practices, what crop you grow. Obviously, one of the biggest benefits to, I'm trying to consider whether to grow a bunch of beans next year. You don't have any green snap with soybeans, right? So you put those all in your bucket and you say, what's my risk tolerance? What am I willing to accept?
Right. Well, and you make a point about wind, and I know it's expensive in Iowa. For the last 2 or 3 years, it's gotten really expensive. And so it's a bigger decision today than it was maybe, 3+ years ago, right?
I can't think of a year where we haven't had at least one windstorm that had some crop damage in our county.
Wow.
So to think that you're going to, I just hope that we're not going to get wind this year. It's going to happen.
It's going to happen eventually,
happen.
Yeah. And so I know Brock is not into row crop production, but out in his area of Nebraska, central Nebraska, the hail threat's real. If we think we know what hail is in Iowa, they kind of laugh. Hold my beer type situation. And as a result, it gets expensive out there. And so it becomes even a more critical decision. I've talked to people in Nebraska before when it comes to hail, and they're trying to use data to make that decision. Part of the data is just the cost data, right? But what's the cost with it versus what's the cost without it? And that's kind of what I'm hearing from you, Tim, on the wind. Very good. Jason, we're going to switch gears here a little bit. So Jason, for the last several years, has been using planting data and production data and basically submitting that for crop insurance purposes. And what it boils down to is, I've talked to a lot of people in my years in crop insurance, and sometimes they make it out to be more complicated than what it needs to be. Well, I'm not a techie, or that seems a little far out there, or my stuff doesn't work all the time, so I don't want to try it. If you could, I guess, walk us through a little bit of your thinking on why you do it, why you started to do it. Has it always worked perfectly? Things like that a little bit.
Well, we report our acres off the planter and keep track of our seed, what we plant and stuff on certain farms, and it just simplifies everything. And kind of the exact acres the planter's running over versus the acres reported at the FSA office, and it shows a different. You running the yield monitor shows different yields, different varieties. It's just kind of handy versus trying to turn in a bunch of papers or weigh ticket slips. And we still double check. We calibrate our combine daily off the grain carts, and we still keep grain cart records just to double check, make sure the monitor's working okay.
Sure. And that's really a requirement, isn't it, if you're going to use it for crop insurance purposes?
Yep. Eric tells me 3%, which is sometimes kind of hard to achieve. I'm thinking about him when we're out there running hard in the fall, thinking, boy, Eric, 3%. So,
well, and that goes into, I guess, the next question is, sometimes things don't work perfectly, right? Sometimes the signal drops or other things happen. Can you talk a little bit about that? And then if something happens, like, is there any flexibility in it, or what do you do?
Well, like I said, we have scales on our grain carts, so we keep track of the weights there. So that's what we fall back on. And this year we had newer combine, which had active yield on it, and it worked perfect on beans. And we went to corn, and it was off by 10%. So we had to shut that off and manually calibrate it, and then we were pretty well spot on then. So.
Gotcha. Yeah, and I guess I'll ask this question too. Feels like a rhetorical question at this point, but you've been using this data for like agronomy reasons and management reasons on the farm, right, for years before you started to use it for crop insurance?
Yeah, we've had it quite a while with the John Deere system. So.
Yep. And so this is just another leveraging of the use of that data, right?
Yeah, it's just a lot handier to prove your acres and yield.
Yep. So I've heard through the years some people say, well, I thought the acres had to match with FSA reported acres.
No, your guys, the FBN takes the acres off your monitor.
Yeah. And a little known fact is you've really been able to use GPS acres since like the mid-90s for crop insurance purposes. And really the nuance there is they don't have to match unless you can't defend that secondary source of truth. And so if you get into a claim situation, the adjuster is going to look for that source of truth. Well, the first source of truth they look for acres reporting is the FSA 578 form. Why? Because it's widely used, right? It's widely adopted. Everyone understands it. And you have to, if you're going to be in the program, that's something you have to do. And it's a good source of truth for acres. But when it comes to GPS acres, as long as you have that well documented with the data and the maps behind it, then that can trump what you use for crop insurance reporting. And some people will take and match that up at the FSA with their FSA reporting so it does match. And then a lot of people don't. They're just like, these acres are going to be what I use for FSA. That makes them happy. And then for crop insurance, I'll use the GPS acres.
Can I add to that?
You bet.
You talked earlier, Eric, about how all three of us up here on the stage will sometimes feed some of our production. And so that's always a sticky point for me is, man, I've got corn that's going to go right to my dad's feedlot after we harvest it. So, a lot of times I think like we're not good enough to actually cheat the system and try and, change our yields. What we do is we have the combine, we match that to the grain cart scale, and when we're doing beans, those beans are going to town and those grain cart scales are matched that. So all three of those have to match within 1%. Otherwise, we're recalibrating the combine. And then when we get done at the end of the day harvesting the field, like we want to make sure they're all within spec. And what that does is then once we get into the corn, then we know that everything is true. So every field has three sources of verification, whether we're putting in grain bags, grain bins, or it's going to my dad's feedlot because he doesn't have a scale there. You've got the combine, the grain cart, and then the fact that the grain cart was calibrated to the scale at the co-op.
Interesting. Thanks for that, Tim. Yeah, so what I'm hearing there is you're talking about even a post-harvest calibration. It's kind of what we call that sometimes, where you're just making it all reconcile. Yep.
Yeah, I want to make sure there's no discrepancies, that
Right.
we didn't harvest for a week and something wasn't right, and I've got no way to prove it. I don't like that scenario.
Right. Well, and with when it comes to livestock feeding records, Jason, I know you've got some thoughts on that. That's something that you, I think, at one time had kind of kept more closely probably than today. Is that right?
Yeah, we were feeding out some cattle there years ago, and I still write down what we feed, just growing our calves right now. So daily feed sheets. So, and that's on some crop insurance stuff. We had to use those feed sheets, and they took them, to report what we fed. So.
Yep. But one thing that the precision reporting does is it kind of replaces the need to rely on that for a claim, right, or an audit.
Yes. Yep.
Yep.
And one thing about the like we check our grain cart scales to the elevator. I forgot to mention that. We send a lot to town, corn and beans. So
Sure.
if something's out of whack, we get it handled.
So what happens if you're relying on your production data to populate your production report for crop insurance, but you look at the results and something seems off, versus like your grain cart scales? Is there something you can do there, or what's your experience been on that?
Well, I think I've talked to you a lot about it. I mean, we just kind of go back to our grain cart scales to prove, or the weigh tickets to the elevator, to prove the yield. If it's off substantially, we'll just go off the grain cart records or the scale tickets to the elevator.
Yep.
We run 2 combines, so it's really nice that you can tell if one had something wrong with it. This is an example, moisture sensor malfunctions, and that changes your yield.
Sure.
And so when you have 2 combines, it's always a check and balance. As we're going through the field, we're always, making sure our yields are pretty close.
Yep. So you'll have 2 in the same field sometimes, Tim?
Yeah.
Yeah, that makes sense. So switching gears a little bit, I want to switch to the topic of crop marketing a little. With respect to crop insurance, how do you look at the data points from crop insurance and the guarantees it provides you with respect to what you need to do every year in marketing the crop? Because marketing isn't an option, right? Some people say, well, I don't get into marketing. Like, well, you probably do. You just don't look at it that way, right? You're going to sell the crop at some point. It's not like a trophy or anything, right? It's got to be sold eventually. Anybody want to give any of your thoughts on that topic?
Well,
We're not asking for market advice.
Yeah. Everybody always says you can sell up to your crop insurance guaranteed bushels, which is kind of true. However, in a bullish market, you can get yourself in a world of hurt being oversold, because then if you have a short crop, you have to buy those bushels back to replace those contracts at a higher price than what they're insured at. In a market like we're in today, I feel like we've kind of peaked. We've been here more than 18 months. Yes, anything can happen, but I feel more comfortable being more forward sold into the 2023 crop because I have my crop insurance there, because we're already at an elevated price level. And me being young, if there's margin to be made in it and it's substantial, what am I waiting for? So I'm going to be a little bit more aggressive right now, specifically in the month of December here, to market some of 2023's crop.
See, and I'll kind of piggyback off that with the cattle market side of it too. When I'm doing that LRP's insurance, is I will look at, like I said, I love that floor that I can put in there and stuff. And I know when I typically sell my cattle, I know when they typically weigh certain weights from the data that I've collected over the years. So then, like you said, I'm comfortable at putting that floor, and then like I said, if I can sell them for higher, I don't mind paying the premium because obviously it's higher.
Right.
But if something like when COVID hit and stuff and beef cattle just tanked and stuff, I mean, I know that time they only allowed so much on every day because it was just dropping so fast that you couldn't. I mean, I wish I would have had it back then. I didn't, but for catastrophic things like that to happen, I mean, it's nice to know that I'm sitting right here at XYZ, and if it goes up, hey, I pay my premium. I had a good year. That means I had a good year. If it crashes, I know I'm protected and I'm still guaranteed that. So when I start marketing my cattle, like I said, I can I can market those cattle whenever, knowing that I got in November I got X amount of price. There's sometimes I'll sell clear back in July on video or something on my extra ones, or try to negotiate a price clear back in July if I think now's the time to market. So knowing where, like you said, that kind of with the crop insurance, knowing where your payout is a big thing. So
Yeah. So what I'm hearing here is there's kind of some intangibles to insurance where it gives you the confidence maybe sometimes that the unknown is still there, but at least you know you've got a backstop, right? If something were to go awry. And of course on the crop insurance side, even with production, right?
It is pretty incredible to think that every year we expect a crop. Most years we get it, but we're in a pretty risky business.
Yes, definitely. We were just talking too earlier that we've had an interesting rash of years here back to back, 2019 and the record levels of prevented planting in several states. And then you had in 2020 the derecho and other erratic events, including drought in some areas and excess precipitation in others, and more prevented planting. And then, of course, add the pandemic in there, and with all the market conditions dropping as a result of that. And then 2021 has brought its share of issues, largely drought in a lot of areas. However, down in the Delta region, a lot of excess precipitation again. And then 2022 is no different. So certainly, crop insurance takes the uncertain and provides some certainty at a cost. Any other thoughts just on this topic here that you guys have on your mind that you think people might be interested in?
Crop insurance can sometimes dictate how conservative or how eager you are with agronomic inputs. So the higher level of coverage you have, the more margin there is to be made in next year's crop, you're willing to put a little more effort, a little more money towards that crop. I would be much more conservative if I did not have crop insurance or did not have the levels. There's a gentleman here earlier that was from Canada talking about he won't get paid unless he has a crop failure. So crop insurance is not as supportive as it is for U.S. farmers. And just the way I would farm, looking at that would be much different. I'd be much more conservative.
Interesting. In a way, seems counterintuitive, right? Because you might say, well, if I didn't have insurance, it's all up to me. I've got to pour things into it. But I understand you have this financial backstop that you'll be able to afford those inputs as well. Yeah. Interesting.
See, and maybe a lot of people don't realize, but cow-calf producers mainly, up until 10 years ago, maybe, we didn't have any crop insurance. We didn't have any subsidies. We've been kind of going at it a lot of our own. So having these products like the PRF and LRP now, that gives us opportunity to protect our livelihood a lot more. And my question to a lot of people is, why not? When they ask me about it and stuff, and they'll come up and say, why do you do this? I'm like, why not? I mean, what else is there? There's nothing else out there for us. I mean, unless you're going to play the markets, I mean, there was nothing else out there for us. So now with the PRF, especially, I mean, with the drought and stuff the last couple of years, I mean, that's been a lifesaver, get extra feed, pulling cows off pasture. We got to do something with them, so we got to feed them, and high input costs. So that's been a really nice offset. So like I said, why not?
Well, that's an interesting point. With livestock, it's a little bit newer on the insurance space, right? As far as what options you've had available to you as a producer on the livestock business, versus row crop insurance has been around for decades. And sure, there's been some improvements along the way, but livestock's relatively newer in the insurance space. And then we were talking earlier, Brock, wasn't it just the last couple of years that the premium support for like the LRP coverage has gotten significantly increased?
Yeah, it's went up. It started at like 33%. Now it's up to 50 on some of that. So that's really helped us out as far as that. And that's why, not to brag about the farm bill, but that's why it's important to have livestock or insurance products tied to the farm bill, because that's what keeps us afloat. And like I said, that's the only thing we got, to ensure that we're going to get X amount, to know that we, every day, like I said, we're going to Vegas every day when we wake up, in our industry, crop
True.
or livestock. I mean, you get about to bet it's the biggest gamble of your life. You're either going to make it or not. So having little tools in your pocket, and like I said, the data that FBN's provided with the rainfall optimizer, the prices, I mean, I look at it daily almost. I mean, unreal on how much I actually do look at it. Just some of it's out of curiosity, and some of it's actually to make my decisions. So,
Very good. Well, I appreciate you sharing that. Any questions from anyone in the audience here for the panelists? All right. Well, I appreciate the panelists today. Appreciate your insights and kind of some of the tips and thoughts that you've got. And I appreciate those in the audience here. Again, there's a little bit of competition with the Farm Bill panelists and presentation today, but we appreciate your attendance, and hopefully you've drawn some good insights from the discussion today.